What's up guys, and welcome back to Wall Street Millennial. On this channel, we cover everything related to stocks and investing. As the global economy heads towards a recession, we're already starting to see the beginning of a financial crisis. Uniper is a German multinational giant energy company and the single largest supplier of electricity in the country. Up until recently, they were doing great, and its stock price quadrupled from 2016 through the beginning of 2022. However, Russia's invasion of Ukraine and the subsequent disruptions to the European energy market have pushed the company to the brink of bankruptcy, with its share price falling by more than 90%. Sky-high prices and supply disruptions in natural gas caused the company to report a $12 billion loss for the first half of 2022. Since Russia cut off flows to the Nord Stream 1 pipeline, they've been losing 60 million euros every single day. According to the company's own CEO, Uniper was running dangerously low on cash, and at the current burn rate, they would be bankrupt within a matter of months. Germany is already facing a cold winter. The bankruptcy of its largest electricity company would usher in a Great Depression-level disaster. In September of this year, the German government announced a plan to acquire a 98% stake in the company for 8 billion euros. This is on top of a 13 billion euro credit line that it extended to the energy giant in August. With this deal, Uniper will be a state-owned enterprise. So how do we get into this position? And more importantly, will this nationalization do anything to save the country from the upcoming winter? Given the economic turmoil gripping the world today, the best thing you can do is take your financial future back into your hands by starting your own side hustle or even a full-time business. That's where today's sponsor Trends comes in. Trends is the ultimate knowledge and networking hub from HubSpot. It connects you to emerging trends and business ideas months before they're picked up by the mainstream media. One of the most interesting signals that I've read about recently is the one about the royalty exchange market. As an individual investor, you can pay a few $1,000s to buy a stake in a music album or other cash-generative asset and generate a yield uncorrelated with the stock market. There are so many interesting money-making ideas that you would never have thought of that Trends delivers to your inbox every week. You also get access to thousands of like-minded entrepreneurs on the Trends community and live Q&A events hosted by industry experts. Quality-wise, these events are similar to MBA lectures, but instead of paying tens of thousands of dollars for some fancy degree, you can get started for just $1. Take advantage of this special offer you can only get on this channel. To start your 7-day trial, go to trends.co/WSM. That's trends.co/WSM to start your 7-day trial for just $1. Uniper was created in 2016 when it was spun off from its predecessor company E.ON, which was an integrated electricity producer and distributor. E.ON maintained control of the distribution assets and power lines, which deliver the gas and electricity to the end users. The newly formed Uniper controlled the power plants that produce the electricity. Before the Ukraine war began, the company was doing quite well. They had a record year in 2021 as the economy recovered from the pandemic, generating more than 3.5 billion euros of operating cash flow. To create electricity, Uniper operated large power plants across Germany, most of which burned either coal or, importantly, natural gas. The company that would become Uniper started cooperating with Russia's state-owned gas giant Gazprom in the early 1970s. This culminated with the construction of the Nord Stream pipeline, which Uniper would use to supply its power plants. In fact, the pipeline was so successful that Uniper invested close to 1 billion euros into the construction of Nord Stream 2. They expected this to become a major growth driver for them after its anticipated opening in 2022. When Russia officially recognized the two separatist regions of Ukraine on February 22nd of 2022, German Chancellor Olaf Scholz almost immediately terminated the certification of the Nord Stream 2 pipeline. A gas pipeline is worthless if it can't transport any gas, so Uniper was forced to take a 1 billion euro write-down on its investment. The company was worth 15 billion euros at its peak, so this alone wouldn't have been enough to cause a collapse. But this was only the beginning of the company's troubles. The Russians decide that if you don't want gas from Nord Stream 2, you won't get any gas at all. Gazprom stopped supplying gas through the Nord Stream 1 pipeline, causing prices in Europe to skyrocket to more than 20 times its normal levels. After the Nord Stream pipeline was shut down, Uniper started losing 60 million euros every single day according to their own CEO. They were running dangerously low on cash, the stock price fell by 90%, and they were quickly heading towards bankruptcy. At first, it's not quite obvious why Uniper should be negatively impacted by high gas prices. Uniper is not an end user of gas or electricity, it's a supplier. Households who have to pay their electric and gas bills are certainly losers from the current situation. But if anything, energy suppliers like Uniper should see their revenues skyrocket as they sell their product for far higher prices. There are two main reasons why Uniper has also been a loser. Firstly, they had signed long-term fixed-price contracts with German utility companies and energy distributors. This means that they are legally obligated to supply fixed amounts of gas and electricity, which is ultimately used by households and businesses. In normal times, this is a great deal. They had signed long-term contracts with Gazprom to supply the necessary quantities of gas. Up until the war began, Gazprom has always been a reliable supplier, sending over almost exactly the same amount of gas every single day, except for pre-scheduled maintenance in July. With fixed-price contracts from their customers and suppliers, Uniper was in the enviable position of not needing to worry about the day-to-day fluctuations in the gas markets. But when the Nord Stream pipeline was shut off partially in August, and then completely in early September, this turned into a complete disaster. They had no choice but to buy the gas on the open market. This comes at a time when almost all European countries are facing similar problems, and they're all trying to outbid each other for what little supplies remain. This has led to a 20-fold increase in price compared to normal levels. Uniper has had to bear all of the costs of the energy crisis, with almost no benefit from higher revenues. The second reason is the low utilization rate of the natural gas pipelines that Uniper either partially or fully owns. Natural gas is thousands of times less energy dense than crude oil, which means that it's challenging to transport them when compared to crude oil. This complexity makes their transportation very expensive, oftentimes making up half of the total cost. The costs of operating pipelines are almost completely fixed. Regardless of if it is flowing at 10%, 50%, or 100%, the cost of maintaining and ensuring its safety is almost the same. Once it became clear that Russian gas would not be a viable option for the long run, Uniper scrambled to find alternatives. In the summer, they started construction of a so-called floating liquefied natural gas, or LNG, terminal. This is a ship that can turn LNG from a liquid back to a gas and offload it into pipelines stationed at the dock. This will allow them to import LNG from places like the US and Qatar. But there are a couple problems. Firstly, these LNG terminals are complicated and take a long time to build. By most estimates, Germany will only be able to make up less than half of their previous Russian supply by winter. Secondly, the entire world is facing shortages of natural gas thanks to underinvestment during the pandemic and excessive stimulus measures in developed countries. This has caused global LNG prices to skyrocket to about 5 times normal levels. This isn't as bad as the 20-fold increase that we've seen in Europe, but even still, it would be above Uniper's contractual prices once you consider the higher transportation costs. Even if Germany could magically build the capacity to import LNG, exporting countries also have capacity constraints. It would take years and billions of dollars of investment to completely replace Russian gas. The difficulties were put on painful display this summer when German Chancellor Olaf Scholz visited Canada asking for more LNG exports. He went home empty-handed, as the Canadians said that this would not be economically viable. He similarly went to the United Arab Emirates asking for gas, but was only able to secure 1 boatload, and that wouldn't arrive until 2023. All of their earlier production had already been booked. Any way you cut it, there is simply no way for Uniper to avoid bankruptcy. The collapse of Uniper would be a complete disaster for the German economy. The company is responsible for 40% of Germany's natural gas supply. If they stopped fulfilling their obligations, the lights would turn out for millions, if not tens of millions of households and factories across the country. For companies not lucky enough to have fixed-price supply contracts, the energy crisis has been catastrophic. In September, Germany's largest toilet paper manufacturer, Hackel, declared insolvency as their gas bills were simply unaffordable. Heavy industry makes up almost a quarter of the country's GDP, with most of these industries either being electricity or natural gas intensive. Germany is already suffering from a massive increase in poverty, with food banks struggling to keep up with demand. Demand has surged as working-class people are stretched thin by record-high inflation. At the same time, donations from supermarkets have fallen by 60 to 70% as food prices have risen. An unregulated collapse of Uniper would also leave people without heat in the winter, which could lead to tens of thousands of deaths due to extreme cold. This would be clearly unacceptable for the government. They had to save Uniper whatever the cost. In July, they announced a €15 billion bailout. Government bailouts are usually viewed unfavorably by the public, as it is perceived as taxpayer money lining the pockets of corporate executives and billionaires. In reality, bailouts are only minimally beneficial to investors. As part of the bailout terms, the German government acquired a 30% stake in Uniper at a valuation of €1.7 per share, a steep discount to the €6 that the stock was trading for at the time. This had the effect of diluting existing shareholders, and the price immediately fell by 30% when the bailout was announced. Had they not received any bailout, the company would have gone bankrupt and the shares would be worthless. But from a shareholder's perspective, whether you're down 90% or 100%, it's a near total loss either way. In addition to giving Uniper 15 billion euros of new capital, the government also allowed them to raise prices. Under a new levy passed in August, a typical household will be forced to pay 480 euros extra per year for their gas bill. While this felt like a big increase for people paying these bills, it was nowhere near sufficient to cover Uniper's skyrocketing costs, and the company continued to burn tens of millions of euros per day. The government publicly encouraged households to reduce their energy consumption. Some cities have even gone so far as to only allow cold showers at public swimming pools. Other than that, all they could do was pray for a warm winter. Unfortunately, these prayers were not answered. This September was unusually cold in Germany, with gas consumption increasing by 14.5% compared to the prior year. There was always hope that the Nord Stream pipelines could be turned back on at some point in the future after the Ukraine war ends. Both Germany and Russia would gain tremendously from this, and Uniper would be saved. But the recent sabotage attacks have dashed these hopes, and there is zero prospect for Uniper to survive as a private company. With spot prices remaining high, Uniper was burning through its 15 billion euros of bailout money at an alarming rate. In late September, the German government announced that they would be completely nationalizing the company. As part of the deal, they will inject an additional 8 billion euros of capital and own 98% of the outstanding shares. This means that almost all of Uniper's future losses will be borne by the taxpayers. So will the nationalization of Uniper be able to solve Germany's energy problems and save them from the coming winter? The short answer is no. A few weeks ago, Uniper CEO Klaus-Dieter Maubach gave an interview warning the people that the worst is yet to come.
We're talking about energy poverty, a real problem for everyday people. How do you answer for that?
I don't have an answer to it. I have to tell you.
But do you bear personal responsibility in your
role? Well, yes, there is. I've said this a number of times now over this year, kind of educating also policymaking governments that, look, the worst is still to come. We've seen gas prices rising since the beginning of this year. Utilities have increased their prices 40% almost every quarter. But the worst is still to come. What we see on the wholesale market is 20 times the prices that we've seen 2 years ago. 20 times.
Gas bills for families have roughly doubled so far, but the wholesale prices for Uniper, and by extension now the German government, have increased 20-fold. If you used to pay 1,000 euros per year for energy, and that increases to 2,000 euros, most people can still get by. But if it increases to 20,000 euros, that's a whole different story. If you're a millionaire, this is fine, and your lifestyle will be barely affected. But for poor and even middle-income people, this will be catastrophic. One solution would be for the government to heavily subsidize gas bills for low-income households. Germany recently announced a 200 billion euro package to do just that. The problem is, every country in Europe is facing the same problem. If they all make their own subsidies, the effect will be to drive up prices within the continent to even more absurd levels. It'll be a zero-sum game where they spend trillions of euros and do not create a single cubic foot of additional gas in aggregate. The European Union knows this and is already developing plans to collectively ration the limited supplies across the various member states. At the end of the day, there's just not enough gas. It doesn't matter what kind of financial engineering or subsidy schemes that you put in place. You can't heat your home with paper money. Well, technically you can. In fact, this was done in Germany about 100 years ago to date during the Weimar hyperinflation. But that would require a lot more than 200 billion euros. Alright guys, that wraps it up for this video. What do you think about Uniper's nationalization? Does Germany stand any chance of making it through the winter? Let us know in the comments section below. As always, thank you so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.